I ultimately believe gold will see $500 or $7,500 an ounce as we get into the latter part of 2025, 26, 27.
Hey there, Silverbug. What do you get when you combine SD bullion and the New Zealand Mint? You get the lowest price silver coin ever released to the world. Introducing the Roaring Lion, a 1 ounce, 4 nines fine silver coin with micro engraving security that retails for lower than some of our competitors sell silver bullion rounds for. Check out this magnificent beast, the Roaring Lion silver coin, at sdbullion.com/roaring. That's sdbullion.com/roaring. All right, all right, all right.
Hey everyone, this is Elijah Johnson with silverdoctors.com. And with us today, a new guest, Nick Santiago, the president and CEO, chief market strategist of inthemoneystocks.com. Nick, thank you so much for joining us today.
Great to be here. Thank you, Elijah.
All right. Now, I saw your recent interview on the Financial Survival Network. This was back in February, and you were saying that you were pretty surprised, actually, at the timing and the strength of the recent move up in the precious metal markets. And you were saying you were expecting a pullback. Now, we've actually seen quite a bit of a pullback in the precious metal markets. So kind of seeing that, where are we right now, and where do we go from here?
Well, if you take a look at my chart here, what I was seeing actually at that time was that we had a tremendous run in the precious metals. They actually went much further than I originally had expected, but they were constructive on the daily time frame. This is a weekly time frame, which I brought into view just to show you where the resistance level was. And if you just look in the past here, early in 2018, what you'll notice is that price really couldn't get through the 1360 level. So we tested that. We actually tested it back here. If you look at September of 2017, and we pierced a little bit above that level if you go back into mid-2016, the July timeframe. And, going up against that resistance point, you're just not going to get through there right away. So we kind of went straight up in that range, and you can see how we've had that pretty big pullback. We went from basically a high, I guess right around the 1350 area. Now we pulled back. If you go back to a daily chart, you'll see it a little clearer, back down to around the 1280 level. Right now, gold itself live, this is a delayed chart, but gold live is now around 1295. So we're sitting in this little area here. It's going to be about the pattern now that we have to watch closely. If gold starts to break down a little bit, then we could see some significant retraces, probably back to around the 1240 level, 1250, maybe even a little bit lower. But right now, it's kind of in the middle of no man's land. It has to form some type of a base, and if it does that, then it can actually go higher. But I do expect gold when we get into 2021, 2022 to really start to make its bigger advance to the upside. So, that's what I'm seeing, at least at the moment.
So it does look like for you, maybe like 2 or 3 more years until we see a big move higher.
Yeah, I think so. Now, unless there are scenarios that can always play out, and I'm just going to move this over to, say, a monthly chart. And what you're going to notice is that we put a really good low in the gold market in December of 2015. Then we put another pivot low in on December of 2016. You're starting to see December a little bit of a theme here. Then as we got into the latter part of 2018, right around August, we broke out actually in the month of December. So if this can form a bullish consolidation pattern, which means basically it's going to go sideways for a considerable amount of time, maybe 6, 7, 8 months, then this can actually make its move now. But if it does that, I think we'll probably stall out around 1400, because that really was where this whole breakdown or consolidation phase started, really right around the 1400 level. So that's going to be another big test if gold does surge up there. Now, there are a couple of real big benefits to having gold now. One, Europe has basically come out, European Union has basically come out and said they really can't raise interest rates. So they have to stimulate the economy. Things have not gotten better there. You have the Federal Reserve here in the United States, which is a central bank here in the U.S., and they basically said, hey, we're on pause. We're not raising interest rates any longer. And then you have the Bank of Japan, which is similar to the European Central Bank. I mean, they've been facing 30 years of deflation, and they're still fighting it, and they can't raise interest rates. So then you look at China. They've been stimulating for the last 4 months since the trade wars have gone on. So you got all these central banks doing all this monetary stimulation, and that bodes well for gold. So, I mean, everybody should have some exposure. Everybody should own some physical gold. At least own, maybe if you don't own gold, own silver. It's the cheap way of playing gold. So everybody should have some exposure to it. And, good to own coins and bars, in my opinion.
Now, can we look back and if you could expand on some of the indicators that helped you predict the recent pullback?
Yeah, so what I look at, and I'm just going to go to this weekly time frame, what I was looking at is basically this consolidation. So you're going to see that price here consolidated really in early 2018. And you're going to see we put a little pivot high in January all the way out. You can make a case really till end of April of 2018. And whenever you consolidate like this and you have a really long time span, say 3-4 months, anytime price goes right up into that level, and if you just take a look here, and I'll draw the line out on the screen so you can see it, but notice from this pivot low to this pivot high, if you put a protractor up to the screen, you'll roughly see that's about a 65 degree angle, 70 degree angle. Anytime that happens, you're just not going to get through this zone that easily. And what I'm drawing out for you right now is just basically the resistance zone. So you go up into that area, now you need to pull back, and that's just generally the way markets work. It doesn't matter if it's gold or if it's silver or if it's the S&P 500. It's human psychology, and when you learn these patterns and you learn how price gets into a certain resistance zone or a certain level where it couldn't go higher, that's usually where you're going to run into a lot of what we call chart resistance, and you'll get a pullback. Just think about it this way. In early 2018, when people were buying gold here, and they were buying it fast and furious because you have some big green bars here. See these big candlestick patterns, these big green ones? That tells you there are buyers there. And what happened to them? They were buyers, and they got rejected. Price went down on them. So what are they going to do now when they get back to break even? They're going to say, hey, I want my money back. I'm happy. They were in a lot of pain as price was declining. Now as price is moving back up, they're into pleasure. And so they have a tendency to sell off. That's why you always got to see charts really reset themselves. And when they reset themselves, and I'll move this back over to a daily chart, like I said, you're going to need to see some consolidation. Then they could move back up.
Now, turning our focus now, you were saying that you think it's really good for people to own precious metals. What is your perspective on investing in physical precious metals versus investing like in the mining stocks?
Well, the mining stocks is still, you're still just really owning paper, right? So if you take a look at, say, the GDX, this is a way you can own all of a big group of mining stocks in one ETF, and then you could own the individual names. So I mean, I don't have a problem with owning the mining stocks or owning specific gold miners. I will trade them. But for me, that's just a trade. If things really, got turbulent in this world, and I think we will see it in our lifetime. In fact, I think in the next 10 or 15 years, we probably will see some really turbulent markets. You're going to want to own precious metals. I mean, that's really, since biblical times, that's been the currency of choice. And I think it always will be. I know these days we have Bitcoin and we have, all of these electronic type of currencies out there. But the reality of it is that a tangible, hard item that can't be printed or minted by somebody is really the true storage or the true value of money. So and that's my personal opinion. Some people will argue it, but I've always gone out and said I don't think anybody could go wrong if you own gold or silver. Somebody will always want to barter with that. And even if you have jewelry, or silverware, I mean, people will still want that no matter what happens. So, I mean, I hope we never see an apocalyptic type of stock market or depression like 1929. But I will say this: history repeats itself. It doesn't always repeat itself exactly, but it has a tendency to repeat itself. So I think gold and silver probably good investments for the long haul, and I think they will have their day in the sun. I ultimately believe gold will see $500 or $7,500 an ounce as we get into the latter part of 2025, 26, 27.
Now, you did say on the Financial Survival Network when we were there that that you do see storm clouds developing in the stock market. So what kind of, obviously we hope it won't be apocalyptic or anything like that, but what kind of environment do you see for the stock market going forward?
Yeah, so right now, if you look at my charts here, you're going to see that we had the September top in the S&P 500. This is a chart of the spiders. So this is basically an ETF of the 500 best companies, and it basically represents the S&P 500. And you'll see that we went down into the Christmas timeframe. Now we've gone up and really have had a sensational first quarter rally. I think the markets actually can go a little bit higher. We really need to get through this black line that I have drawn in on my chart. Once that happens, we'll probably see this go and try to test the highs. I don't think we're going to go through the highs this go round. But when you get into, again, it's going back to the same premise. You see how we sold off here in October. This one right where my cursor is October 10th, and we had a monster sell-off. And what I want you to notice there is that the volume on that sell-off was about 214.7 million shares. That's a monster sell-off day. So, what do you think is going to happen when price gets back up into this range? You're going to get all the people that have been holding saying, hey, I don't trust this market. I'm going to get out. And then that'll build upon itself. So I think we're in for probably, beginning sometime in, late March, early April, May. I think we have some, pretty good storm clouds ahead of us where the markets are not going to go up and break out to new all-time highs. And I've been getting people saying, hey, what if a China deal is reached? As these China deals or any deal gets reached, it could become a buy the rumor, sell the news type event. We have to look at the chart pattern. But my cycle work, and I do a lot of work on cycles, and I made a lot of predictions. In fact, I predicted this top in the market, and I predicted this bottom virtually to the day. And now I say that, we're probably going to have some rough environment for about 3 to 4, maybe 5 months. And I think traders should be aware of that.
Long term, if we go to kind of the time frame you were talking about for precious metals, you say it'll really get after the races once we see 2021 or 2022, and then a lot higher prices in 2025 and so on. For the stock market years down the road, where do you see the stock market headed?
Oh, well, I think ultimately you're going to have booms and busts, and that's kind of how I'm theming it going forward. Right now, believe it or not, after we have another correction, I think the stock market's an excellent opportunity to own stocks. I think that's how you have to really be a trader and be able to navigate through these waters going forward. The easy money has been, pretty much made from 2009 all the way up to maybe, last year. Now that kind of is over. You're going to have to be able to navigate through the waters. But ultimately, I do think with all of the central bank intervention and everything else that's going on, and even the cycles are telling us we still have more upside ultimately in the market. As we get into 2021, 2022, 23, 24, 25, and 26, I mean, it's going to be a trader's market where you're going to have to be nimble. You're going to have to be able to get in and get out. And if you're not able to do that, it's going to be a very, very tough environment.
Now, if we look at kind of going forward here with respect to like investing in the stock market, I guess, can you talk a little bit about the, you talked about at the beginning about holding precious metals and then investing in, holding physical precious metals, but then also investing in the mining stocks, kind of a speculation. Would investing in the stock market again kind of be for speculation, or can we have sort of how would they say it? You hold it for the long haul.
Yeah, I think the buy and hold theory is going to be very, very tough. I know that's the Warren Buffett approach, and I understand it. And over the long term, I guess that historically people could say it's worked out. But just think about this for a minute. If you owned, say, the NASDAQ 100, and I'm just going to punch this up on a monthly chart, and if you own this back, say, let's just go with, in 2000, right? And you went down. I mean, or just say even 99. Look how long it took for you to get your money back, right? You didn't even get back to break even if you owned this in 1999 or 2000 until you got to 2016, 17. So, I mean, there's always that chance that, you can hold things out for a long, long period of time. But, I don't really see that, as a good strategy. This is what I do for a living, so I have to be in and out for the most part. I'll give you another example is if you look at, say, the Japanese market, right? That topped out in I believe 1989. I mean, people just are basically back to flat now after 30 years, So I don't really subscribe to that buy and hold and just let it run mentality. I think that's a little bit too tough, and there's a inflation adjusted currencies and things like that. So it's very, very tough. But if you have the staying power and you can do it, by all means, you give it a shot. I'd rather be in and out of the market, not so much so quickly. I am a quick trader, but what I like to say is that if you could find where these markets are going to make these big shifts, that's where you want to be in and you want to be out, or you want to even be shorting the market at times.
Definitely. And then for like the average investor, what do you think are some of the indicators they should look at to be looking towards? Should we be investing in stocks right now, or precious metals, or mining stocks? What are some of would you look at more technical analysis, or would you look at more of the fundamental trends in the economy?
Well, for me, to be honest, I'm 100% technical. So I'm constantly relying on the charts. I could care less about the news. I could care less about GDP. I could care less about earnings per share, book value, all of that stuff. To me, I used to look at that 30 years ago when I first got into this business. Now, it's really just all about the charts. The charts tell you everything you want to know, simply because, these represent footprints of human nature, right? Here you're starting to see fear. Here you're starting to see greed. And, fear, greed, hope, and ignorance, that's a great quote from Jesse Livermore, really moves the stock market, those four emotions. So, again, when everybody is fearful and, you want to be able to step in and be a buyer, when everybody is euphoric and they love things, remember what happened up here in September, late September of 2018. You had Amazon go to $1 trillion market cap. You had Apple go to $1 trillion market cap. Microsoft was climbing up towards $1 trillion market cap. Everybody's euphoric there, right? Everything's great. When everybody's leaning on one side of the boat, let me tell you, I'm going to the other side of the ship. So that's the way you have to look at it when trading the stock market. When everybody's euphoric, you got to be fearful. When everybody is fearful, you got to get greedy and step on in. It's hard to do. It's not an easy thing to do because, we're not wired that way. We're not taught that way. But as traders, you become very contrarian to everybody else, and you become wired that way.
Definitely. It's very counterintuitive, and it goes against often what we're feeling like we should be doing.
Absolutely, 100%, and well said. That's basically it. So, the market it has a tendency to fool most of the people most of the time.
Definitely. Well, Nick Santiago, thank you so much for your time today. I guess before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, they can always come over to our website, inthemoneystocks.com. We put a ton of content out on our Rant and Rave blog. You could also follow me at my Twitter feed. I put a lot of content up there as well. And again, my handle there is Nick Santiago 01. So, and that's at Twitter. So come on over, check it out. And again, we do it all. We day trade, we swing trade, we look at commodities, currencies, stocks. It really doesn't matter what it is. If it moves, we can trade it.
Awesome. Once again, Nick, thank you so much for your time.
Thank you very much, Elijah.